Hello everyone, welcome to our live session today with Peter. So Peter, I understand that the USD is on the rise, right?
Yeah, it's still on the... Actually, it has risen even further and at a faster pace yesterday. And the main reason was practically that we had comments which were made by Fed officials, specifically Cleveland Fed President Mester, which stated that she would expect the benchmark rates to be above 4% in the coming months. It took the markets by surprise, given that the current rate of the Fed is at 2.25. So that was an issue. And at the same time, I would be highlighting that we had subsequent comments which were made by Dallas Fed President Lorena Logan, where she stated that practically the Fed's number one priority was to curb inflationary pressures in the US economy. Thus, in our opinion, it's expected that further aggressive rate hikes are to come by the Fed, something which definitely has supported the US dollar. On the other hand, we have to note that the US ADP national employment figure, which was due out yesterday for August, it actually dropped, and we would expect it to more or less weaken the US dollar. The markets passed it under the radar and practically continue to support the US dollar. However, that could imply some implications in tomorrow's US employment report for August.
And what else happened in the FX market?
We had, for Euro traders, it was interesting that we had an acceleration slightly beyond market expectations of Eurozone's preliminary HICP rate. That was for August as well. The rate reached 9.1% year on year, and that could be adding further pressure on the ECB regarding its next meeting. That will be next Thursday. So practically the market may expect the bank to proceed with a wider rate hike, possibly a 75 basis points rate hike. That could be in the cards. More or less, that tended to provide some slight support for the euro, which did not drop as much as other currencies against the US dollar. At the same time, I would also be highlighting that yesterday we had the release of Canada's GDP rates. And the rate showed that the Canadian economy grew at around 3.3%. That would be on an annualized basis. Yet that was pretty short from the market expectations. So that tended to weigh on the Canadian dollar. At the same time, we had also a drop of oil prices, which more or less also weighed on the Canadian dollar. Last but not least, I would be highlighting the Aussie. We had during today's Asian session a release from China, the Caixin manufacturing PMI figure. The figure dropped, and it dropped below 50. And that's the cutoff point between advancement and contraction. And in this case, that implied practically that economic activity in the Chinese manufacturing sector contracted over the month of August, which more or less verifies the reading by the National Bureau of Statistics of China manufacturing PMI, which also showed that Chinese factories were struggling. COVID cases play a significant role here, given China's strict COVID policy. At the same time, we also had from Australia the release of the capital expenditure growth rate. That was for Q2. It was expected to accelerate substantially, reaching 1.5% quarter on quarter. It remained in the negatives. And that implied that Australian businesses lack the confidence to actually invest in the Australian economy, thus may not contribute that much to the recovery of the Australian economy.
How have US stock markets reacted?
US stock markets remain cautious, thus bearish. It was characteristic that for a third consecutive day we had all three main indexes, the Dow Jones, S&P 500 and Nasdaq, being in the reds. So the bearish prospect is still there, and we expect that more or less the market seems to be driven by the Fed's hawkishness and the expectation for a possible recession in the US economy. That's a little bit questionable under the sense that the Fed may be aiming at low growth rates at this point, but nevertheless that would still be a negative for US stock markets. So we may see that investors may prefer to play it safe, given that there may be less opportunities for business development and profitability for US companies in the coming months, maybe even the year.
And how about gold prices?
Gold's price dropped as well, and that was mostly a consequence of the strengthening of the US dollar, given that the shiny metal is denominated practically in USD.
Are oil prices still dropping?
Yes, we had a second consecutive day with considerable drops of WTI, and definitely the worries of the market that the tightening of monetary policies around the world could curtail economic activity, thus weaken demand for the commodity, could more or less continue to weigh on oil prices. On the other hand, we have to note here that yesterday we also had the EIA crude oil inventories figure. It's on a weekly basis, and it showed that for the past week there was a widened drawdown, which more or less implied that demand in the US oil market was greater than production levels for the past weeks, practically causing oil inventories in the US oil market to drop somewhat. And that would be actually a positive sign, but the big picture here, once again, seems to be that oil demand may drop. Thus, should there be no correction lower of production levels, we may see oil prices continuing to drop.
Thank you. And what's on the calendar for the day?
Well, on the calendar for today, I would be highlighting practically two main releases. Three. The first would be from Canada, and it would be the building permits growth rate. Should we see an acceleration, especially should the rate surpass 0, that could provide some support for the CAD, as that would be good news practically for the Canadian construction sector. From the US, we have two releases. The first would be the weekly initial jobless claims figure. In this case, a slight rise is expected. If actually so, that would imply practically that we have more unemployed or more people being fired in the past week than the last one, and that could imply a loosening of the US employment market. The third one is also from the US, and in my opinion it's the key one. It's the ISM manufacturing PMI figure. It's for August. It's expected to drop from 52.8 to 52. Definitely that would imply, should it actually come to surface, that would imply that practically the expansion of economic activity in the US manufacturing sector slowed down. And that could be also a consequence given the Fed's rate hikes in the past few months. More or less, we see the risks related to the release as tilted to the downside. All of that, though, may be overshadowed given that the market has started to shift its focus slowly but steadily towards the August employment report, which is due out tomorrow.
What's expected from August US employment report tomorrow?
Now we have three main indicators. The first would definitely be the non-farm payrolls figure, the NFP figure. It's expected to drop to around 300K. The second would be the unemployment rate, which is expected to remain unchanged in comparison to July's rate at 3.5%, which is pretty low. And we have also the average earnings growth rates. On a year-on-year level, they're expected to accelerate slightly. The question is, should the actual rates and figures meet their respective forecasts? We may be getting some mixed signals. On the one hand, we have a drop of the NFP figure, which may disappoint traders and thus could cause some downward pressure on the dollar, while at the same time may strengthen a little bit the US stock markets. On the other hand, though, we have to note that the unemployment rate is expected to remain at rather low levels. And given that also the average earnings is expected to accelerate, thus implying that the US employment market could continue to feed inflationary pressures in the US economy, that would allow the Fed to continue with aggressive rate hikes in the coming months, given that the Fed has a dual mandate. It has to keep inflation at 2% and at the same time promote maximum employment. So the pain in the employment market, in the US employment market, is still at low levels. And that would more or less prompt the bank to hike possibly another 75 basis points rate hike in its next meeting. Overall, though, I would note that the US employment market seems to remain tight. Even the drop of the NFP figure to 300K, actually 300K is not a bad figure, and the drop after July's outstanding result would be expected.
And any final comments for today?
Once again, I would expect the cautious sentiment to be maintained. Note that with the exception of Atlanta Fed President Bostic, we don't have any other substantial Fed policymakers on the calendar to speak. However, Bostic could keep the hawkish rhetoric once again. I would expect the market to focus mostly on the ISM manufacturing PMI figure. On the other hand, though, the cautious sentiment could continue to drive US dollar upwards, while US stock markets could drop even further.
Thank you, Peter. Stay tuned for our next live session with
Welcome to the technical analysis part of the presentation. In front of your screens, you have the US dollar index. It's the 4-hour chart. Please bear in mind that all charts presented will be in the 4-hour time frame, unless otherwise stated. With no time to waste, we see that the US dollar index has maintained a sideways motion, testing constantly the 109 resistance line, yet was unable to break it. So we tend to switch our bullish outlook in favor of a sideways movement, as we have mentioned yesterday. And we maintain that bias for sideways movement just below the 109. And I wouldn't be surprised to keep it also above the 108.30, the 1.30. The possible mid-level we had mentioned would be around here. Give me a sec. It is. So you see the testing here at this level. It's a pretty tight range-bound movement, but overall it seems to remain steady. Should the bulls take over, I wouldn't be surprised to see the price action of USD index rising, breaking the 109, and starting to actively aim for the 111. On the other hand, for a bearish outlook, I would require the price action to drop, definitely break the 107.20, and start actively aiming for the 105.55. The RSI indicator continues to revolve around the reading of 50. Actually, right now it's just above it. It's at, let's have a look, at 53. Yep, 54. Implying a rather indecisive market, which could allow the sideways motion to continue. Okay, let's have a look now at Euro USD. Euro USD also with, there are some bullish tendencies here, but still in my opinion, we're talking about the sideways movement. The interesting part of the movement is that it has broken just above parallel level. Even at some point yesterday it dropped below it. We have a number of higher lows here and slightly higher highs. However, that seems to be failing right now. For the time being, I would maintain a bias for sideways movement, given also that the RSI indicator is just above the reading of 50. Also note how the Bollinger Bands are converging despite an upward slope. But volatility is decreasing seemingly, as indicated by the Bollinger Bands. Nevertheless, let's switch the parallel from a resistance line to support line. Let's set our sights on the next resistance level, which could be placed here, given this movement here and this touch. Note how practically the level reversed the upward motion of the pair, and that was at the beginning of August, actually on the 2nd of August. So that's a pretty valid level. Another one would be far higher here, and we had one touch, two touches, which is also quite valid. For the time being, I would be giving this level here a chance. Yep. And that would be the 1 point, excuse me, in red, the 1.0290. Let's make the necessary adjustments. Correcting the labels right now. Euro USD, which in contrast to other currencies does not seem to be weakening against the US dollar. It remains at least stable. That's a positive. Indicative of euro strength there. And it's understandable given that the acceleration of Eurozone's HICP rate, that was for August, the preliminary rate, more or less may have enhanced market expectations for a widened rate hike by the ECB on next Thursday's ECB meeting. And the final resistance line being placed at 1.0290. There we are. Once again, we tend to maintain a bias for a sideways movement Some slight bullish tendencies may be present for the pair. And should the bulls take over, I wouldn't be surprised to see Euro USD actually breaking the 1.00925 and starting to actively aim for the 1.02. On the other hand, should the bears take over, I would expect the price action to once again break below parity level and start aiming for 0.99, which provided support here. The RSI indicator seems to remain near close to the reading of 50, once again implying a rather decisive market, which could allow the sideways motion of the pair to be maintained. Let's switch now to cable, and that would be cable's 4-hour chart. A clear downward motion in contrast to the euro before, which has remained rather stable. The pound's weakening against the USD. So we tend to maintain a bearish outlook for the pair as long as the price action remains below the downward trend line. Please note that also the RSI indicator is running along the reading of 30, once again implying a rather bearish outlook or bearish sentiment on behalf of the market for the pair, for cable. Please also note that the pair's price action has been flirting with the lower Bollinger Band, which may more or less slow down the descent of the pair to low grounds. Nevertheless, should the bears remain in charge and may even intensify the movement, we may see cable dropping, breaking possibly the 1.1450 and start actively aiming for the 1.13. On the flip side, should the bulls take over, I wouldn't be surprised to see the price action reversing direction initially, and that would be the first signal from the price action that the trend has changed, breaking the downward trend line. Definitely, I would require a clear break of the 1.1645 and of the 1.1755. Let's have a look now at Safe Haven USD JPY. USD JPY, which seems to be finding some trouble, some resistance at the 139.40 resistance line. There's a correction here. See how it was testing the level once again, but the bullish outlook remains. It's characteristic that the pair remains above the upward trend line, which has been driving the pair's price action since the 11th of August. At the same time, please note that the price action is flirting with the upper Bollinger Band. Despite a convergence of the Bollinger Bands and some lowering of the price action, it's still at high levels in the RSI indicator. After correcting below the reading of 70, still remains pretty high at 65, also implying a rather bullish sentiment on behalf of the market. Should the price action drop even lower, we would require a clear breaking of the pre-mentioned upward trend line before switching our outlook from bullish bias. Should the bulls maintain control over USD/JPY, we may see the price action rise, breaking the 139.40 and starting to aim for the 141.50. A stabilization could occur, given that it has largely respected the 139.40 here. I would expect the stabilization to take place between the 139.40 and the 137.45. However, I would require clear breaking of the upward trend line, signaling the change of trend and definitely the price action to remain within these two boundaries for a sideways motion. Should the price action break the upward trend line, yet at the same time also break the 137.45 clearly, that may imply a bearish outlook for the pair, which may drive it even lower, starting to aim for the 135.55 support level. Okay, Let's have a look at the second safe haven currency pair. That would be USD-CHF. USD-CHF, which seems to be testing the upward trend line right now, actually broke it, but we still have another upward trend line which seems to be guiding the pair. So some stabilization could take place here, possibly between the 0.9785 and 0.97. Yet, until the second upward trend line is also broken, we tend to maintain a cautiousness for the bulls to take over once again and drive the pair higher. Should the bulls actually maintain control, we may see the secondary upward trend line shifting to the right. We'll be looking something like this. And the price action would require clear breaking of the 0.9785, and definitely I would require a peak which will be higher than this one. In which case we may see the price action maybe even aiming for 0.9880. In a bullish scenario, I wouldn't be surprised to see that. On the flip side, should the stabilization take place, most probably we may see the price action breaking the secondary upward trend line and stabilizing between the 0.97 support line and the 0.9785, somewhere in this range. A bearish outlook, we would require A, the breaking of the secondary upward trend line, the breaking of the primary upward trend line, a breaking of the 0.97 support line, and the price action to start actively aiming as the gates are open for the 0.9610. For the time being, note that the RSI indicator corrected lower, nearing quite well the reading of 50. Actually, it's now at 59. So it's pretty near, at least nearer than it was before, and may once again imply some stabilization of the pair. Let's have a look at USD-CAD, commodity currency, in a nice upward trend line, even an intensification of the upward movement after bouncing on the 1.3075 support line. Let me just correct a little bit the labels here. We tend to maintain a bullish outlook for the pair, and in that case we may see it breaking the 1.3220 resistance line and start aiming for the 1.3350 resistance level. Please note though that we have an RSI indicator which has touched the reading of 70, once again indicative of the bullish sentiment of the market. Also, interestingly enough, the price action is flirting with the upper Bollinger Band, which may slow down the price action's ascent higher, may even cause a temporary stabilization. The same would apply also with the RSI indicator, which is near the reading of 70. Also note that the price action currently is at levels not seen since mid-July 2022. So we're talking about a 1.5 month high. I would like to have a look at that. I hit this. That would be the 14th of July. So bulls may start hesitating a little bit. Drilling back down now to the forward chart. And that may cause another slowdown for the pair's ascent higher. But overall, the bullish sentiment seems to be present and could guide USD-CAD higher. Definitely the fact that Oil prices dropped. At the same time, we had Canada's GDP rate not reaching market expectations. And on the flip side, the US dollar continuing to get additional support due to the hawkish rhetoric of the Fed drove the pair higher. Also, the market cautiousness is not the best environment for the commodity currency to thrive. Let's have a look now at AUD/USD. AUD/USD, which seems to be bouncing, but not enough. Let's draw a downward trend line here to see what we are talking about. So it's about to test it. Okay. And we have definitely to correct the 0.6840, which now becomes a resistance line. Let's go hunting for a new support level. It is. I would like to see these touches here. I'm going to refrain a little bit from this shadow here and focus this one. It has multiple touches. What level is that? That would be definitely green. And that would be the 0.6710. Okay, let's make the necessary corrections in the labels as well. So as an ultimate resistance line, we have the 0.6945. Second resistance line being placed at 0.6880. First resistance line being placed at 0.6840. First support line being placed at 0.68. And actually, I'm a quite happy analyst today, given that the current S1 was tested and practically held its ground. That's nice to see the verification of the prognosis. Second support line being placed at 0.6760. And final support line being placed at 0.6710. I know it's pretty close, but there seems to be some hesitation here, which makes the price action respecting it. For the time being, a small recap. We tend to maintain a bias for a downward motion as long as the price action remains below the downward trend line, which was incepted since, let's have a look, the 30th of August. That's pretty fresh. So it may be a little bit uncertain here, but also note that the price action is actually testing right now the downward trend line. It will be interesting to see whether the price will stabilize or continue its downward motion. For the time being, and as long as the price action remains below the downward trend line, we tend to maintain a bearish outlook for the pair, in which case we may see it breaking clearly the 0.68 support line and start actively aiming for 0.676, if not even tested. Also note that the RSI indicator is currently at the reading of 40. More or less could imply some bearish tendencies here as well. The RSI indicator, the Bollinger Bands It's interesting how the price action dropped and practically bounced on the lower Bollinger Band, which provided some support here, forcing the price action to correct a little bit higher. Yet for stabilization, I would require a clear breaking of the downward trend line and the price action to respect the 0.6840 and the 0.68 levels. For a bullish outlook, I would expect the price action once again to break the downward trend line. The first signal always of a trend reversal. Definitely I would require a clear breaking of the 0.6840, and I would also require a testing of the 0.6880. So I would require the pair to go up at least 60 to 70 pips before considering a bullish outlook. Okay, let's have a look now at a pair we haven't seen for a long time. I see you have been asking for it. That would be the USD TRY. Give me a sec. That is. So we haven't checked out this pair in a while now, and it would be interesting to make some readjustments here. One readjustment would be this. One support line. Here. I'm going to narrow the levels considerably. And let's drill out to the daily chart. Somewhere here. 4-hour chart back in. Loosen it. Okay, we have something here. Yeah, it's a prior resistance line, which now turns into support line. Okay, let's have a look at resistance levels. Definitely we have one here. Constant testing. Let's drill out to the daily chart. No higher levels available. Now, as we're talking about the next 24 hours, $90 and 10, that would be 17.9910 USD TRY, 17, sorry about that, 45, and the final support line would be on 17.4920. First resistance line now being placed at 18.2260. Second resistance line being placed at 1846. That would read 25. And the final resistance line being placed at 1867.20. Now we see a steady upward motion of the pair moving in scales. And it becomes more clear if we see the daily chart. You can see that we had a rise, an intense rise, a stabilization, another rise, another stabilization. Now we have a third rise, another stabilization, as we have approached practically the 18.2260. I would expect the price action to remain rather stable for a while before making its next move higher. For the time being, there seems to be some stability here. There could be some slight hesitation as we have Turkey's FX reserves coming out tomorrow, and should they actually show that the FX reserves of Turkey have dropped, that would be a negative for the lira. It's a worrying currency pair, this one. Okay guys, thank you very much for your contribution. Let's move now to gold. Gold's price, which has been dropping, has broke the 1713 level, which now turns into resistance line. Let's go hunting for the new support line at the low. These we do not actually need, so let's simply delete them. Nor do we need the circle here. No, this one. Okay. Was there a touch? No, there was no touch. And I feel we're going to have to go pretty far back to see such low prices for gold. Okay, let's scroll down up to the daily chart. There we go. And that would be 2020. Drilling back to the 4-hour chart. Unfortunately, it doesn't go that way back. Once again to the daily chart. I like these touches here. And here. I think this is a pretty valid level. Could go a little bit lower. Nah. No. I'm keeping this one. And that would be in green. The 1610. Yep. Drilling back down to the 4-hour chart. Readjusting the chart. There we go. Let's correct the labels. The ultimate resistance line is now being placed at 1800. Sorry, yeah, 1765. That was a mistake. Let's correct this. The second resistance line being placed at 1740. Gold's price, which has been dropping, practically because of the strengthening of the US dollar mainly, given that the two trading instruments tend to have a negative correlation. First support line being placed at 1680. Second support line being placed at 1645. Final support line being placed at 1610. We found out just early on, but it goes way back to 2020. Let's draw also the downward trend line. Something like this. And that would initiate the downward movement with this peak here around the 25th of August. So we tend to maintain a bearish outlook for the precious metal as long as it remains below the downward trend line incepted since the 25th of August. Should the bears maintain control, I would be expecting the precious metal to reach, if not breach, the 1680. Also, please note that the RSI indicator is running along the reading of 30, implying a rather bearish sentiment for the indicator. Bearish sentiment for gold's price. On the flip side, a stabilization may be possible given that the RSI indicator may also imply that gold has reached oversold levels, in which case we may see the price action breaking the downward trend line, possibly remaining below the 1713 or even crossing slightly above it and revolving around it. Note how the 1713 provided resistance here, and support here, and resistance here. For a bullish outlook, we would require a breaking of the downward trend line. Definitely, that would be a first sign of a trend reversal. A breaking of the 1713, and that would also require the price action to reach, if not even breach, the 1740. It's a movement which could be done easily by gold within a day, under the proper circumstances. Let's also have a look at WTI before closing. WTI, which is moving downwards. Here we have a slight correction shift to the right of the downward trend line. It's actually testing the 87.20. It tested it during today's European session, right here. So for WTI, we tend to maintain a bearish outlook, given also that the RSI indicator is near the reading of 30, even with a downward slope, and it's aiming at it. On the other hand, please note how the steep drop yesterday of the commodities price breached at some point the lower Bollinger Band and forced it a little bit higher to correct, yet the bearish tendencies are still present. So I wouldn't be surprised to see the price action finally being able to break the 87.20 and start actively aiming for the 82.60. That would be also a signaling of the sideways motion which was present all this here. As the 87.20 provided support here, was broken here, yet tested once again here, tested once again here, tested just right now. So it's a pretty valid level, and the breaking of the 87.20 would definitely, clear breaking, would definitely confirm the bearish tendencies, the bearish outlook. On the other hand, a possible stabilization, I would expect the price action, given that the 87.20 had provided some support a couple of times in the past, I would expect the price action to respect it, break the downward trend line, and remain between the 92.60 and the 87.20. On the other hand, should the bulls take over, which is also a possibility, we may see the price action rising, breaking the downward trend line, once again signaling a change in trend. But for a bullish outlook, we would require also breaking of the 92.60 and the price action to start once again aiming for the 165. Let's have a look now at Dow Jones as well. It's a nice clear downward movement with the corrections. Oh man, that's a little bit too tight for me. I'm going to be keeping this from here. It's beautiful how the price action practically bounced on this mid-level and then continued lower. It's actually right now testing the 31,445 in a clear downward motion. Note though that the RSI indicator has breached below the reading of 30, which may imply that the Dow Jones has reached oversold levels and may be ripe for a correction higher. For the time being, and as long as the price action remains below the downward trend line, we tend to maintain a bearish outlook for the index. We would expect the index to break the 31,445 and start actively aiming for the 30,440. On the other hand, should a stabilization take place, I wouldn't be surprised to see the price action breaking the pre-mentioned downward trend line, yet remain between the 31,955 and 31,445. For a bullish outlook, I would require A, a breaking of the pre-mentioned downward trend line, B, a breaking of the 31,955 resistance line, and definitely a breaking, if not testing, of the 32,380 mid-level. That should sum it up from all of us here at IronFX. We hope that you found the report useful. From all of us here, best wishes for solid trading.
My name is Christina. In our previous videos, we looked at the role of central banks. Today, we will look in more detail at the Federal Reserve System, the central bank of the United States. The Federal Reserve System was established by Congress in 1913 when President Woodrow Wilson signed the Federal Reserve Act into law. The Federal Reserve was created in order to build a more stable and secure financial system. Since the creation of the Federal Reserve, other pieces of legislation have shaped the operation of the Fed. After the Great Depression, Congress passed the Banking Act of 1935, which established the Federal Open Market Committee as the Fed's monetary policy making body. During a period of high inflation, Congress enacted the Federal Reserve Reform Act of 1977, which set price stability as a national policy goal. Stable prices support the economy and help people and business plans their finances. The Federal Reserve System has a two-part structure, a central body called the Board of Governors located in Washington, D.C., and a network of 12 Federal Reserve banks. One of the basic functions of the Fed is setting monetary policy, which takes place at the meetings of the Federal Open Market Committee with members of the Board of Governors and Federal Reserve banks. The Federal Open Market Committee is the Fed's body that decides about monetary policy. The FOMC has 12 voting members, 7 members of the Board of Governors, and a group of 5 Reserve Bank presidents. The chair of the Board of Governors is also the chair of the FOMC. The current Fed chair is Jerome Powell. There are 8 meetings a year in Washington, D.C. Economists at the Board of Governors and the Reserve Banks assess economic and financial conditions within the U.S. and worldwide. On the final day of each meeting, the members vote on monetary policy. Following the meeting, the FOMC issues a written statement about economic conditions and policy actions. The minutes of each FOMC meetings are released after 3 weeks. The actual transcripts of each FOMC meeting are also released after 5 years. This releases the FOMC press conference speeches by its top officials as well as interest rate decisions and announcements. All have an impact on the financial markets and determine the USD dynamics. The latest aggressive interest rate hikes by the Federal Reserve have spooked markets and created concerns among investors as they fear the economy will stall and enter a recession. Thank you for watching.
Video listening. The webinar has been recorded. Okay. Oh, it's recorded already. Can I just pause it? Hello, hello. Good afternoon, everyone. Thank you for joining us. Hey there. If you can hear me okay, just put it into the chat. Let me know that you can see my screen and you can hear me all right. Just wanted to check that we have everything set up properly. Before we get started with today's topic on the MACD strategies. So for those of you who are joining us, who have turned up early or on time, welcome again. I'll give it a couple of minutes before we get started. We'll see who else streams in. Hey, Techno, can you hear me okay? Just wanted to check on that. All right. 1 or 2 more minutes and we'll get started. Quite a interesting and probably a little bit of a heavy topic today, so want to get started soon. Hey Gwyn, how are you doing? If you can hear me okay, just let me know, put it in the chat. Just want to make sure that the sound and the audio is coming through okay. Super, super. Thanks for that. Today we are with IronFX on the webinar series getting through the MACD strategies. So one of my favorite topics here, so looking forward to this session. I'll give it a minute more and we'll get started. We'll see who else streams in. I hope your trading has been okay. If you have any questions, please feel free to, any trading questions, please feel free to let me know. Put it into the chat and I'll be happy to help you through that as well. Okay. So let's get started. I'm coughing a little bit. All right, let's get started. As I was sharing with you, we are looking at the MACD strategies today on the webinar series with IronFX. As usual, before I jump into, or before I get the webinar started proper, just a quick disclaimer there, or here is that any information shared in this webinar should not be considered as investment advice or investment recommendations, but instead as an educational material only. All right, so I will be sharing with you how to apply the MACD, or what's the MACD strategies about, how to apply it to your trading strategy. If you do jump into any trades, make sure you do your own due diligence, make sure you check your margin, check your leverage, make sure you do your analysis before you jump into the trades, all right? E-certificates will be distributed on this webinar. I'm not sure about the e-certificates. I will check on that. I'll probably let you know at the next session again, because I'll check that and I'll get back to you on the next sessions. All right, Gwyn? Okay, so let's get started now. Just a quick introduction. My name is Jin. Well, everyone calls me Jin. My name is Jin Dao. I'm one of the prop traders and market analysts, and I've had many years of trading experience. So I'll be happy to guide you through. MACD is one of the strategies or one of the indicators that I use to in my daily trades. So I'll be happy to share with you, my point of view, the way I use it, and how you could actually apply the MACD to your strategies as well. Okay. So again, if you have any questions at any point in time, please feel free to put it into the chat. Don't wait for me to take a pause, because you never know when that's going to happen. So put it into the chat. I'll jump onto your question whenever I see it pop up. All right. So with the MACD, today what we're going to be going through, a few key points here. I'll be sharing with you what the MACD is. Okay, actually, while you're in the session, let me know, do you actually use the MACD? Right? Do you use the MACD as part of your trading strategy? So at least I know whether I can tweak it to help you a little bit more. So we'll go through what is the MACD. We'll interpret, I'll teach you how to interpret the MACD, the components of it, and then the MACD trading strategies. Right? I'll share with you some trading strategies with that and how to combine it with your own trading strategies. Okay, so quite a few things to get through today, but I'm sure it's going to be a nice, fun session. Do let me know if you have any questions moving forward. So what is the MACD? If you do use the MACD, let me know again. But what is the MACD? Basically, MACD is the moving average, convergence, and divergence. All right, it's a convergence and divergence of the moving average. It's not just a simple moving average. It is calculated in a different way, but the MACD is a short form of the moving average, convergence, and divergence. It is it is a momentum indicator. It is a momentum indicator. And, you know, typically it is also recommended that you use it in a trend following scenario, right? So when you see it's a trending scenario, then you would apply the MACD to look to see whether, hey, is it going to continue? Is there strength in that move? Or is there possibly going to weaken? Or is the move going to weaken, stop moving, or to possibly reverse? So a momentum indicator that you use in a trend following scenario, I will, at the later part of this session, also share with you how you could use it, possibly as a bit of a potential reversal indicator as well. Okay. Quite simply, you can use the MACD quite simply just by looking for that crossover of the MACD, the moving average, convergence and divergence. And when you see a crossover, it would either trigger a buy signal or a potential sell signal. All right, so you're looking for that crossover on MACD to trigger either a buy or a sell signal. It's a technical indicator, so it's just all based on the charts there. Okay, so quite simply, that's the few key points on the MACD. It is made up of four components. First one, the MACD line. All right, MACD line is actually a calculated line, where, you know, just to get into a little bit of the technicals, I don't want to go too much into that because you don't really have to know how to calculate it. It's all done there on the charts for you. But MACD line is actually the 12 exponential moving average minus the 26 exponential moving average, right? The 12, you can see here, oops, where's my mouse? The 12 moving average, 12 exponential EMA minus the 26 EMA, right? That's the first component. The second component is a signal line, which is the 9-period EMA, right? So these are the two MACD, the two lines on the MACD. You typically see crosses like that. That would be the MACD line, and then the signal line would be another one towards the downside, the 9-period moving average. Between, and that's what you would call a crossover when the lines intersect. Between the MACD line and the signal line, you get the histogram, right? The histogram are bar charts. So this one will be the bar charts. I'll show you this. Right, my drawing is terrible, but I'll show you this in terms of the charts as well. And then the zero line. Okay, the zero line. So four key components to pay attention to when you're looking to apply the MACD onto your trading strategy. How it looks like, this is your MACD line, right? You see that blue line there, that's your MACD line. You can always change the colors as well according to your preference. Together with the MACD line, that's a signal line, right? So there's MACD line, that's a signal line there. You see the histogram, which is the bar charts. And the bar charts or the histogram actually tells you that length of that. So the length of the histogram actually tells you the distance, or gives you an indication of the distance, or you consider the strength of the MACD, right? So the distance between the MACD line and the signal line, right? In this case, you can see that because the MACD line is below the signal line, the histogram points towards the downside. And then you can see that as that gap widens, the bar gets longer, all right? Then as it narrows back up, you can see the bar gets narrower again, widens, get longer again before it narrows back up. So typically when you see a red histogram, you're going to see price moving towards the downside. When you see a green histogram and also the MACD lines, you're going to see price moving towards the upside. Okay, because you're going to see that distance between the MACD line and the signal line. And the next very important thing is that zero line there, right? That middle line. Yeah, there's a zero line, but it's the middle line. We actually use the zero line to actually help us gauge the potential strength, and also possibly the speed of the MACD and the price movements. Okay, see a question there. Can we get a playback of this session? I'm pretty sure it is being recorded, so I'm pretty sure it will be uploaded possibly onto YouTube. So check out the channel. I'm sure you could find it there. If not, then I will get some info on how to get that sent out to you guys as well. All right. So I hope if you've just missed a little bit of it, but it's always good to check back on the sessions in case you've missed some bits and pieces. But if during the session you miss any parts or you would like me to elaborate further, let me know. I'll be happy to go through parts of it in extra detail. All right. So again, remember 4 components to the MACD: the MACD line, the signal line, the MACD histogram, and the zero line. Okay, so how do you apply this? What do you consider when you're looking at the MACD? Oops, right? Okay, there we go. So when you look for a selling signal, right? A selling signal is when you see the MACD crossing over, the MACD line crossing over the signal line. That blue line going above that signal line, the yellow line or the orange line, and crossing towards the downside, right? Crossing towards the downside, that's where you would say, hey, I found or it signaled a selling opportunity, a selling signal. And in this case, based on this example, you can see that based on that line as it crossed over, right at that point there, we did see price move towards the downside. Okay. On the other hand, when you look for a buying signal, you look for the MACD line to cross up from that signal line, right? Up and above that signal line, you're going to see price move towards the upside. You're going to see price move towards upside. In this case, you can see that it did move up, but not immediately. It moved up a bit gradually towards the upside there. Okay, so there are factors that could influence or does influence the strength and the overall move of the MACD, which I'll share with you in a little bit more detail later into the session. Okay, but the main thing is what you're looking for here is that crossover, right? The MACD crossing down from the signal line to signal a selling opportunity, and the MACD line crossing up from the signal line, signaling a buying opportunity. Okay, so quite straightforward. Cross down, looking for price to move lower. Cross up, looking for price to move higher. Okay, so when you think about your MACD, you're going to consider a few things, right? You're going to consider a few things. Oops. First, you always know it is called the moving average convergence and divergence. And we all know that for moving average, it is always going to be a little bit lagging because price needs to move first for the moving average to draw 1 point, right? A 9-period moving average would need price to move before it draws a point after 9, and then move again before it draws another point. So it is a lagging indicator. Okay, and because it is a lagging indicator, there will be situations where price has already moved, right? Price has already moved, and then you see that the MACD crosses over, which actually would give you some fake signals, right? It could give you some fake signals because, like just on the example we just saw here, crossover, price actually did move up, right? Before it came back down again before moving back up. So it could give you a little bit of a false signal because it is that little bit of a lagging indicator. What you also want to consider when you're applying the MACD as a trading strategy is that crossover strength, right? That crossover strength. Like I was sharing with you, how do you determine that crossover strength? There are 2 components to consider a crossover strength, right? The first one is when it's at that, when you want to consider that zero line, right? If you see that in this case, there's a 0 line and you see MACD crossing below that zero line towards the upside, then we're going to say it's a strong buying opportunity. If you see a zero line, but then you see MACD crossing towards the upside above that zero line, price could still move up, but we're possibly going to see it not climbing too strongly towards the upside. It might be a very gradual move towards the upside. So that's the first one that you want to consider in terms of strength, or how to tell the strength of the MACD is that zero line, right? Consider where is that crossover, whether it's above or below that zero line. And also the crossover strength, you want to consider the histogram, right? We're going to consider the histogram because you want to see the distance between the MACD, the space between the MACD. If it's narrow, right? If you do see MACD crossing, maybe just like that, not doing too much, histogram is going to be very small. It's going to be very weak. You're not anticipating a big move towards the upside, or if we see it crossing down like that, you're not going to anticipate a big move towards the downside. So look at the histogram and also the zero line to give you an idea of the strength, the possible strength of the MACD. And then, like I was sharing with you before, you could use MACD to help you identify potential reversals in price, right? You could see price moving towards the upside, and then maybe at a support or resistance level, you see that price has hit and it's consolidating at that area, and just happen you see that the MACD actually crosses at that same point. So as it consolidates, you see MACD crossing down. You might actually use that as another indicator to tell you that there's a potential reversal towards the downside. All right, so use MACD with for a potential reversal, but it needs to pair up with either a support level or resistance level, or possibly with some news coming out. You might see it coming close. So you might actually see MACD coming very close together with a news coming out. If it does break, then you could see price push towards the upside for price to move up. Okay, so few things to consider when you're looking at the MACD trading strategies. Lagging indicator, just remember it's a lagging indicator, could give you some fixed signals, right? No indicators is ever 100%. So it could give you some fixed signals because it is lagging. In terms of identifying or considering the strength of the move, right? You look at the crossover strength, you consider the zero line and the histogram, and then you use it at a support or resistance levels to help you identify a potential reversal in price as well. Okay. So just to give you a few examples here, applying the MACD strategies in terms of a buying opportunity. In terms of a buying opportunity, you can see here that we saw a crossover. Okay, the MACD line crossing up from up and above that signal line, which led to price moving towards the upside. Okay, so now we're only looking for buying opportunities. I know you can spot a few selling opportunities around, but we're looking for buying opportunities here. In this case, again, right, remember that this is remember that this is below the zero line. This is all below the zero line. So when you're looking to buy, draw it over here. This is the buying. If it crosses over here, this is buying opportunity. If it crosses above that zero line, and you're looking for that selling opportunity. Okay, so in this case here, you can see that the MACD line crosses up from that signal line, but price actually moved up a little bit before turning back down again. All right, so in this case, this worked. This worked very well as an indicator. This didn't work. All right, it moved up a little bit, would have been too late if you got in there because I've gone down and closed you out. Again, at this point, you see a crossover again. Right, you can see that histograms are pushing towards the upside. we do see a brief push towards the upside before turning back down again. Okay, so this could also work because it did move towards the upside relatively strongly. Again, another one here, this is an interesting example here, is that it has crossed, but it hasn't really, I'll take that, let me just do that again. All right, so you can see here that although it has crossed, but you see that the histogram isn't very strong. It hasn't have big bars towards the upside or towards the downside, crossing over, hasn't really formed that big distance between the MACD line and the signal line. And that's why we saw price zigzagging and moving lower again. Okay, so in this case, that example or that signal didn't work. All right. And then the second last one in terms of the buying opportunity, we're looking at again across. All right, we saw a good, nice formation of a histogram towards the upside. Then we saw price actually move quite strongly towards the upside. So this one works, right? Oops, let me draw a proper tick. All right, so this one works. And then again, at this point, a good crossover here, nice histogram level showing that distance between the MACD line and the signal line. And we actually saw that price actually zigzagged and moved towards the upside. Okay, so this one works again. What you should notice here is that we have had 1, 2, 3, 4, 5, 6 examples here, right? 6 examples here of a buying opportunity on MACD, and 2 of the 6 failed, right? 2 of the 6 failed. So it's not a very high, right? At this point, if you just looked at the MACD alone, if you just did nothing but looked at a crossover, it's not a very good indicator, right? It's not a very good indicator because if you just looked at the crossover, it gives you almost that 50-50 chance of making money, all right, which is terrible. Some other things you want to consider, right? I'll share with you later as well, but I'll go through a bit briefly now, is the trend, all right? In this case, we saw it bounce off a support level, pushing towards upside. That trend is towards upside. That's why this worked at this level. Why this and this didn't work is because that trend was towards the downside, right? The trend was towards the downside, hasn't formed at a key support or resistance level. That's why we saw price move slightly up before turning back down again, right? In this case, again, big downside move, price move slightly up before turning lower again. At this point, possibly at a key support level, that's why we saw it bounce up, came back down, again, the key support level before we saw that reversal or that push towards the upside. So some things to consider here. And just to warn you as well, if you only looked at the MACD in terms of a crossover, then it's going to be a 50-50 chance that you can make money. You do need to consider the trend. You need to consider support resistance levels and some other tools or some other indicators or add it on to your strategy rather than just to use the MACD alone. Okay, so that's the buying opportunities. Let's look at the selling opportunities on the same chart. In this case, we see that crossover here. We do see very weak histogram levels there. And as you all would know already, we have seen price move towards the upside. Okay, so anticipating a big move towards the downside with that recent move up, we're not going to see that happen because trend was one of the first things we had to pay attention to. And that's why you saw price sit right across. Doesn't really form as a good selling opportunity. So in this case, didn't work. All right, in this case, it didn't work. Now it's gone up. It's hit a resistance level. It started to turn back down a little bit. We see a crossover. We see a formation, that downward move, a formation of that histogram towards the downside. And that's why we saw price move lower. because, and one of the reasons is because of the MACD crossover. Okay, so in this case, it worked very well. Again, we saw a small bounce, hit a level, turn back down again, and still very close to that zero line. MACD line crossed down from the signal line, histogram still pointing towards the downside, gaining that space or that strength. That's why we saw price move very significantly lower again. All right, so that works very well. Then again, you can see that overall trend, right? Overall trend. Oops, let me do that again. Overall trend is towards the downside here. And we saw that price went up, hit that diagonal level, turned back down, MACD cross over here. And that's why we saw that downward push on the MACD towards price, towards the downside as the MACD line crossed down from the signal line. Okay, so in this case, worked very well. And then again, as that price push up, you can see very short-term move up towards, well, very short-term price moving higher, set right across. We did see some crossover here, not a big deal in terms of the histogram, and that's why we saw price sit and then bounce back up again. All right, again, it is back to that trend. It is back to considering trend, not just that crossover level. All right, so this one didn't work. Again, just to highlight to you, 1, 2, 3, 4, 5 examples. 2 worked, 3 worked, 2 didn't work. Again, almost that 50-50 level if you only just considered the MACD crossover without considering trend. All right, so went through a lot of examples here, really to highlight the point to you that you should, right? You always should consider trend and that support resistance together with applying the MACD crossover levels. All right. So we spoke all that about entry levels, right? We went through buying entry levels, selling entry levels. You know, trading is not just about where to get into a trade. Right? As much as you know where to get into a trade, you want to know where to get out of a trade as well. All right, you want to know where to get out of a trade as well. And in this case, let's go back to this example. You can see that there was a support level formed here, right? A support level formed here, right? With that line there, we saw price bounce up. Let me just take that away. We saw price bounce move up from that support level, right? A small bounce towards the upside. We see a MACD cross over there, signaling a potential buying opportunity. In this case, you could be looking at, hey, entry there, stop loss just below, stop loss beyond that support level, take profit before the resistance level, right? This is a resistance level here that we find. So before that resistance level, what happens? You can see that price actually climbs up, went up, did hit that resistance level here, right? So you have 2 ways you can look at it. Either look for price to hit that resistance level or your take profit level there. Oops. Trying to draw straight lines with a mouse. That's terrible. All right. So you could be looking at your take profit level there. So it would have come very close. So you either look for it to when to exit your trade is either to your TP, right? Or to a support or resistance level, right? Or when there's a crossover again, right? A crossover again. In this case, it's right at that point there. Okay, it's right at that point, and that's why we signaled there as if that's going to indicate a selling opportunity, then hey, if you have a trade running, a buying trade running, you should close out that trade, not to sell it back down because that recent move was towards the upside. You want to close out the trade and see what happens from that point on. All right, so 3 ways to consider to exit your MACD trade is either it goes up, hits your take profit immediately. Automatic close, that's straightforward. You could look for it to move towards that support or resistance level. And then also you could look for a crossover to signal to you that you want to close out that trade even before it gets to that support or resistance or your take profit level. Bear in mind, I would rank it in that format. All right, so I would think that a crossover will be possibly one of the last reasons I would use as a possible exit signal. Right, I'll use the crossover as a last reason for an exit signal because this one is lagging. Right, MACD is lagging. So what could actually happen is that it goes up, it turns back down already, and then it crosses over. You would have lost a lot of potential profit there. So crossover will be one of the lagging indicator. I'll use it as the last reason I would get off a trade. First of the two will be either take profit or if price moves towards a stop support or resistance level. All right, so that's in terms of a buying opportunity. You know, where to get out of the trade is at those levels there, or for those reasons there. In terms of a selling opportunity, where to get out of a trade. All right, so you can see that using that same chart, we got in there, we got in at that point, got out to that level there, then price continued moving up, right? You wouldn't have, just based on the MACD trading strategy alone, you wouldn't have entered any trades between these points, right? Not perfect examples because nothing happened here. Nothing happened between these points here. We did see a cross towards the downside, but there was a big upward move. That's why we're not going to look to sell it down. And also we can see that a strong support level is there. All right, you don't anticipate for price to break that support level. Okay, so what we did see was price move up, tested higher before a reverse back down again, forms a resistance level there. All right, so as price moves lower from that resistance level, you can also see that crossover towards the downside, indicating a selling opportunity based on the MACD. If that gives you that selling opportunity, then we're going to see possibly selling there, stop loss there, take profit just before that support level. Almost a 1:1 risk-reward ratio towards the downside, just based on the MACD there. Okay, so this is another example I want to show you is that where would you close out your trade at that or close to that support level, right? You would have closed out your trade. You don't want to wait for that crossover here. Like I was telling you, it is a lagging indicator. So if you waited for that crossover there, you would have seen that price has reversed a great deal. It bounced off, reversed almost half of your profits before it signals that you should close out the trade. So I would say that's why I say that take profit is first, support or resistance level is the second reason, and then that crossover, use it as the third reason on why you want to get out of a trade. Okay, what you see here, that's the first example. Second example, we can see that price tried to break down, bounced around at this level. We wouldn't have looked to buy there. We wouldn't have looked to buy there because price has been trading lower. So you don't want to be buying into a downtrend. Which is also why we saw price move up, hit that resistance level before turning back down again. All right, as it hits that resistance level, like I was telling you, a potential reversal indicator. You see price consolidating at that resistance level. We see that crossover towards the downside. And that's why we see price push lower. Okay, you can see that if you sold there, take stop loss at the top, take profit at that support level there. Oops. All right. Oops. You take profit right just before that support level there. Then you will see that price went down and closed out at your take profit or at the support level. You don't want to be, again, don't want to be waiting for that crossover, because you do see price bounce back up before, potentially turning lower, or you could actually see price reverse back up again. So exit based on take profit, exit based on your support or resistance levels, and then lastly, exit based on the MACD crossovers. Okay, so how do you add the strategy to your chart? If you are looking, and I'll share this with you right after this last slide here, right? Combining the MACD with your trading strategies, you could be looking, as I was telling you, always make sure you identify the trend. If it's moving towards the upside, then you want to be looking for that crossover for that further buying opportunity, right? Support resistance levels, you want to be looking for, take profit levels or potential reversals. You look for that crossover, consider that crossover strength, and then that reversal of your using MACD as a potential reversal. Okay, so just to share with you, let me get that away. Right, so to share with you here, how do you apply that onto your chart? If you're using TradingView, you can go into indicators, you can find moving average, convergence and divergence is there. If you are onto MT4, then you can go into the indicator section, you'll find the moving average or the MACD as well, and then you can find the moving average there as well. Okay, so you can just drag it in. It's one of the ones that you can just drag it into your charts. All right, one of the indicators that you can drag it into your charts. Let me just check something. See if I can load that up. Give me 1 second, just check something there. Not loading. That's a good question there. Let me just have a look. Okay. I'm trying to load the MT4 just to show you, but the MT4 doesn't seem to be loading well. Okay, okay, here we go. I'll just put this across just to give you an example. You could be looking, so you go into the navigator section, you look into the indicators, and then you look for the MACD. You can just, I don't have a connection here, so I don't think it'll work. You just drag it across, apply it, and then it applies to your chart there. So you can just see that crossover lines towards upside and also the downside. Okay, so many ways. If you're on TradingView, you can search it on the indicators. If you are on MT4, then you can drag it right across to your charts and apply it. So just to share with you again how it looks like in this case, if just look applying the MACD to your charts. I want to spot a few possible crossovers for you right now. This is the euro dollar on the H4 time frame. You can see that we do have a potential, looks like it's forming a potential crossover towards the downside for the euro dollar on the H4 time frame. Okay, so in this case, you would say that price has hit that resistance level of 1.0041. It's turning towards the downside. My next support level is at 0.99, at about 0.99 there. Okay, so now that we see that crossover, it hasn't crossed over yet, so we're a little bit early. You could be looking for that selling opportunity towards the downside. In this case, about that level, almost a 1:1 risk-reward ratio towards the downside. Okay, so that's on the H4 time frame. If we applied this to the H1, all right, take that line away. Right, you can also see that we have seen that crossover already. So that crossover, oops, Change that line a little bit so it's easier to see. Happened right at that point, right? So you would have, if you were looking at this on an H1 time frame, then you would say that, okay, I've seen the MACD crossover, I've seen it hit and reject that move towards the upside. You'll be looking for that selling opportunity. Again, stop loss above that resistance at about 30 pips. Take profit could be first level here at about 30, or you could be looking at that downward move about 90 pips. So it's a 1:3 risk reward ratio towards the downside. Okay. Then what happens is after it moves lower, once it clears this level, once price breaks below this level, I will move my stop loss to break even and then write it all the way down again, right? For potential 90 pip move with my stop or with my trade protected at break even, right? So does give you a little bit of an early indication or possible early indication towards the downside as you see price moving lower. Okay. I do think that we might see the euro dollar trade lower because look, strong histograms towards the downside, price at a MACD line quite strongly below the signal line. We could see price go lower towards that point there. Okay, so that's a good example for the MACD. As a beginner, on which time frame can I use trading the MACD? Okay, so very good question. What I would say is that you should use it on the H4 or the H1 time frame, right? Even if, as a beginner, H4 and H1 for sure. Even if you're a intermediate, I would say intermediate trader or experienced, I would say H1 and H4. Unless you're really experienced and really know what you're doing, then you go below that H1 time frame. All right. Why I say that is because even if we just went to the M15, what you see is that it does get quite noisy. All right. I'll drag this up a little bit. It does get quite noisy. Ignoring that, moving away from that example, if we just looked at that, you'd see that you would have you would be very heavily influenced by that crossover. You'd see a potential crossover at this point here, thinking that that push towards the upside would be a good place to buy. But then you see that price actually sits right across, small upward move before turning back down again. Or you would, in this case, consider a possible sell there because of that crossover. Right? But then you realize that it doesn't drop, it bounces back up before finally dropping again. So stay to the H4, stay onto the H4, H1 time frames. It works very well there. If you go into the smaller time frame, it becomes a little bit too noisy, a lot of movements, a lot of crossovers that don't actually play out too well. For example, again, in this scenario here, right, we saw a small crossover. Most people would think that, can it break past this point, push lower, but actually came down, hit that support level and bounced strongly towards the upside. So very good question there. I would stay on the H1, H4 time frame. Okay, so another example here on the pound dollar. Right, you see the pound dollar dropping very strongly back to the H1 time frame. Take that away. That's my previous analysis. Okay, you can see the pound. Oops, where did my indicator go? Take that one away. Okay, so you can see that. This is one example I want to share with you, is that it is crossing. MACD is crossing, but it's crossing below that zero line. It's crossing below that zero line. So it can drop some more, it can drop further, but it might actually slow down a little bit. Right? It might actually slow down a little bit. So just watch out for that. I am anticipating further downside on the pound dollar, but because if I went to the daily time frame, you would see that it is at a very, very low point. Last time it got to this level was back in 2020. So, if you looked at it at this level here, then a very low point could bounce back up, could fluctuate at this level. And that's why we haven't seen that big push towards the downside. Okay. As compared to this move here. As compared to that, where we actually saw price reject that level, all right, reject the resistance there, turning down, right? And then we saw price drop very strongly with the MACD just slightly at that zero line towards the downside. We saw that big move. Again, pay attention to that support level. That's why we saw price bounce back up again. Right now, trying to trade lower. Looking at it on the H4 time frame, you can also see that crossover is below that zero line. We are expecting it to drop further, but just be a little bit careful. Might slow down, might drop lower before bouncing back up again. Okay, very good question there. One more example. No, where's the US yen? Right, so clear that out. US yen on the H1 time frame. Okay, you can see that we do see MACD starting to cross over at this point. Right, starting to cross over, a little bit of a histogram forming towards the upside. Not perfect because it is above that zero line, but we could anticipate that price could go higher. But you want to pay attention in this case to your resistance level, right? We do see that price has been moving up, but it has rejected that 139 level once, twice, and it's approaching that again. So I'll wait, right? Consider all the points put together, trend pushing towards upside. Price needs to break above that resistance level before we use the MACD, or we consider the MACD as another indication or another confirmation for price to move higher again. Okay, so that's a good one there. You can see here now price again. So forming towards the downside here, we have two examples, two very good examples here. The first one is price reacts to that resistance level. As price reacts to that resistance level, turning towards the downside, we see a crossover at that point. You can see that price has already moved down. What a lot of traders would have done is they might have, for some other reasons, sold, right? 3 black crows towards the downside. They might have sold at that point. If you missed out on that, or you already sold that, you see price dropping. This gives you another confirmation. Yeah, you could expect price to drop lower, and based on the MACD, if you're already in the trade, it gives you that confidence, that confirmation. If you haven't already, then you might have been waiting to enter. At that point, gives you that additional confidence to enter the trade. Within the 1 hour, it goes from 6152 to 6126 or 6123, almost a 30 pip move within the hour. Okay, and you would have gotten out at about that. You would have a level there. You would also have a level about there because of that resistance or the interim resistance level. So you would have gotten out of your trade almost immediately, almost within the hour, instead of waiting for a crossover. Okay, so this is another example here. If we did see that crossover, you entered there and waited to exit a crossover, you would have lost most of your profit back and close out at a very small profit there. Okay, so I would say that, again, take profit levels, stop support resistance levels, very important, before you consider the crossover as a level to exit your trade. Now, moving this line slightly lower or slightly across, you can see a crossover again, this time below that zero line. Anticipate for the Kiwi dollar to push lower but it is very near to that support level. If you did enter into this trade because of the downward move, you would say that selling opportunity, stop loss 16 pips, take profit towards this at this support level is not going to be great, right? It's 10 pips. It's not a great risk to reward ratio towards the downside. So, there are times where you get a signal, right? The signals will always fire out. It will always tell you, there's a crossover here or a crossover there. You also want to consider, is it worth taking the trade? Is it breaking that level? Is it worth taking the trade? Does your stop loss and your take profit make sense if you did jump into this trade? So despite, a crossover, not a perfect crossover because it's below that zero line, you wouldn't have gone into that trade because it's too close to that take profit level or that support level there. Okay. Applying this now to the US Swiss franc. Again, you can see that crossover on the H4 time frame, crossover, which saw that big upside move despite it being above that zero line. Okay, dollar index, clear that out. You can see again that crossover, that potential crossover, this case also above that zero line, pushing the dollar index towards the upside. You can enter a trade above that zero line, above that crossover, when there's a crossover above that zero line, but just be extra careful. That's not the perfect setup. It is still a setup, but not a perfect setup for that upward move. Okay, then lucky last, share that with you, right? Lucky last, I'll share that with you. Something to watch out for, Euro pound on the H4 time frame. Euro pound on the H4 time frame. It is reacting very close to that 0.86 resistance level, right? It's tested, failed to break higher, tested almost a pin bar towards the downside, and you can see that at this point now, MACD is, like the name says, moving average is converging. It's converging, right? So we could actually, what I would be looking for here is if price could, or if MACD could turn crossover, right? It could cross over towards the downside, and then we could actually see price turn down, right? Turn down from that resistance level. If that happens, the next profit level would be at 0.8510 because of that resistance levels there. Okay, so I would be sitting there. I would check back again to see whether price does cross over or turn, or whether MACD does turn down and cross over towards the downside to push price lower. That's a good reversal setup, potentially a good reversal setup. Not ready right now. We do see price moving a little bit higher, so not ready right now, but I'll be watching for that to see whether we're going to see a reversal down. All right, you can see that it's happened quite nicely again at that point there. Reverse hit, reverse push towards the downside. Okay, and this is in a bit of a range, right? It's moving in a bit of a range. That's why we can see both that upside and the downside move on the MACD using the MACD on the Euro pound there. All right. So with that, any further questions? Any further questions? One more example. All right. So one more example here. This is the pound yen. Right, this is the pound yen at this key support level of about 161. Let's find it at that point there. The 161, no, 161 is a good level. About there, where we see it turning down. We do see a crossover towards the downside. I would be looking for whether price could trade lower to break below that support level and to trade towards either that 160.35 level or even that 159.50 level. Okay, we do see that crossover forming here on the H4 time frame. Alrighty. So if you have no further questions, let me see, any questions? Okay, if you have no further questions, what I'll do is I will leave that with you for now. If you have anything, let's catch up in the next session. I'll be happy to answer your questions on, if you have further questions on MAC, we can get through that, or I look forward to you joining us at the next session. Okay, in the meantime, trade well, trade safe, and I'll see you again. Take care now. Bye-bye.
Everyone, my name is Emily and today we're going to talk about hedging. Hedging is a risk management strategy which is applied to offset losses in investments by taking an opposite position in a related asset. Basically, hedging refers to reducing some sort of risk or exposure that could negatively impact your portfolio. It can be the risk of a specific stock or an industry experiencing a decline, the risk of interest rates rising, or inflation being higher than expected. Essentially, you can hedge by adding investments to your portfolio that move in the opposite direction. For example, you could hedge your exposure to a specific stock by shorting that same position. In doing this, you offset your loss, so if the stock drops in value, the short position will increase in value. Hedging strategies involve the use of financial instruments known as derivatives. Two of the most common derivatives are options and futures. With derivatives, you can develop trading strategies where a loss in one investment is offset by a gain in a derivative. Moving on to the benefits of hedging. Risk mitigation. The main benefit of hedging is that you are able to manage risk and the investment exposure you have. Derivatives can be used to protect yourself if things don't go in the direction you expect. Now we limit losses. With hedging, you can limit your losses to an amount that you are comfortable with. The cost of the hedge will limit your gains, but your losses won't increase in the case of a price decline. Now we lock in future prices. Companies use derivatives to eliminate the uncertainty of future commodity prices. By using futures and forward contracts, they can lock in prices for essential goods well in advance of their delivery date. Now, the risk of hedging. Limiting your losses is one of the principal benefits of hedging, but it also means it will limit your potential gains. If an investment increases in value and the hedge is not necessary, you will lose the cost of the hedge. Hedging has a cost. This is either the direct cost of a derivative contract used to hedge or the cost of lower profits in return for some protection against losses. That's it for today, guys. Thank you so much for joining us. Stay tuned for more educational videos.